Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq. With the economic challenges priced into markets, the biggest risks are now material deterioration of U.S. China relations and the U.S. election. Joining me is Dave Mazza, managing director and head of product at Direxion, to discuss. Dave, it's always great to see you. Welcome back to Trade Talks.
Thanks for having me back, Jill.
All right, let's talk about the unprecedented stimulus being injected into the market and economy. Does this make you constructive on the markets, even with the economic picture unstable?
Yeah, frankly, Jill, that's one of the only reasons that we're constructive on the markets, especially to the extent that we are. We have not had a Lehman Brothers moment like we had in the global financial crisis. So with the amount and swiftness of monetary policy and fiscal policy, it's really boosted investor sentiment. And that's one of the reasons why we've seen multiples expand so swiftly. Now, this earnings season is going to be particularly important, though, because when you have a market based off of hopes for additional stimulus, especially now that we're seeing some cracks in the economic recovery, without earnings delivering or the expectation that there will be some earnings coming, even if in 2021, we might see some headwinds going forward.
Let's go back to multiples and valuation. How can we explain a market that appears to be disjointed from the economic and geopolitical realities just simply on stimulus?
Yeah, well, yeah. If you look at valuations, if you look at price to earnings multiples, price to sales, you pick your price multiple. They're in the 90th percentile. Really, the only one that is somewhat reasonable is looking at price to free cash flow. But as you know, how often is that quoted in the media? We're focused on earnings. We're focused on revenues. Again, it's the stimulus here which is helping boost sentiment. But what it's done is I think this week is a good example. Markets are still a bit fragile. It doesn't necessarily mean we'll have the potential for big sell-offs, because if we do, I think that would induce the potential for another stimulus package to come from Congress. But again, if we actually don't see better guidance than we have been, especially as we get into the meat of earnings season, then I would probably take down some of my constructiveness. But for the time being, the expectation is those checks are being written and likely more checks will come.
What's the biggest risks to your outlook?
The biggest risk to the outlook we have, well, certainly you could say additional stimulus isn't coming, but really the biggest risk, I think what's priced in to most of the extent is what's going on with economic openings or not and reopenings. The biggest risk is certainly this China issue that has been bubbling back up again. Markets again are ignoring it to some extent that we saw with the trade war. But what's really interesting here is the election. We know, of course, Biden is the presumptive nominee at this point. Vice President pick is likely coming at some point at the beginning of August. But what markets might not be pricing in is a blue wave. Oftentimes, the momentum that we see, if one party does so well on the presidential side, that could tip the scales in the Senate. I think most people are still assuming we're going to have divided government. Divided government historically has been very good for the markets. That's contrary to what people's expectations might be. But if we actually see Biden end up turning more to the left than what he even has been in some early speeches, especially on things like climate and different types of spending, and on the tax side, that certainly could put a limit on how much multiples can expand further from here.
All right, and to wrap, let's talk about our portfolios for a bit here and how you can use Direxion levered ETFs in your portfolios against this backdrop.
Yeah, so for traders, our Direxion leverage and inverse ETFs are excellent tools. They're intended to amplify exposures both on the bull and the bear side on a variety of different markets. Whether or not people are looking for broad-based exposures or more precise exposures. For example, we've seen significant interest this year in our bull home builders product, our aerospace and defense product. Those have names in the portfolio that have been on the move, and traders have stepped in to take advantage of those opportunities that have arisen to them as we've seen volatility increase, especially with the prior years having seen so little volatility across markets.
All right, Dave, great to have you with us as always. Thanks for joining me on Trade Talks.
Thank you.
All right, and thanks for joining me. I'm Jill Malandrino, global markets reporter at Nasdaq.